with us. Brad, great to see you.
Great to see you.
Thank you so much for being here. So you predicted an 80% chance that this bill is signed by April, saying that clarity is better, and obviously than uncertainty. Tell us where you get that expectation.
Well, I mean, to some degree, you can never predict exactly how Senate and Congress are going to act. But
unless you're in the prediction markets.
That's, we should talk about that, too.
Yeah, let's talk about it.
Look, actually, the prediction markets around this point, around the Clarity Act, spiked because of some comments yesterday from Senator Moreno, who's been an advocate. I think it's now 90% it will pass by the end of April. I had said a couple weeks ago, I thought end of April. At the time, people thought that was a little optimistic. There's a meeting today with a lot of leaders on both sides, the crypto and banking, in the White House. Actually, it's in 30 minutes or so. Ripple's chief legal officer is representing kind of Team Ripple there. But the White House is pushing hard on this, and I think that is a big reason why it will get done. It needs to get done for U.S. leadership. President Trump has been a clear leader and put the stake out there that we need the U.S. to be the crypto capital of the world. That's good for U.S. competitiveness, and that leadership from David Sachs and Patrick Witt in the White House have been really critical around. Our view is we need clarity. Ripple has been fortunate, and we got sued by the U.S. government and had a federal judge say XRP is not a security. We have clarity. Yeah. That's brilliant.
And you got that clarity in the Genius Act.
We did get, the stablecoin market got that clarity in the Genius Act. But the industry, the crypto and blockchain industry in the United States, needs the same clarity that Ripple had to fight for in the courts. And I think for this
that
industry,
XRP is a security.
The XRP is not a security.
Okay.
And that's what the courts ruled very clearly. And so we were very happy to have that. But the whole industry can't live in limbo. And so our argument is the Clarity Act, it needs to get done for the industry to thrive here in the United States.
So
Brad Garlinghouse was just on Fox News and dropped a bombshell. He's 90% sure the Clarity Act will pass by the end of April. This is the moment that we have all been waiting for, the end of regulation by enforcement in the digital asset space. In this video, we're diving deep into why this is a massive bullish catalyst. I'll explain exactly how this law will finally classify assets, drawing the fine line between the SEC and the CFTC jurisdiction. And what this means for your portfolio. It's not just about Bitcoin anymore. We're about to witness the great decoupling from speculation and non-utility to full-blown utility. I'll explain what we could be expecting. I'll also dive into some latest developments for XRP, XLM, CC, HBAR, and XPR network fans, and more. The Clarity Act is the holy grail of U.S. legislation for crypto. For years, the industry has suffered from regulation by enforcement. This bill finally draws a clear line in the sand for the industry. It defines commodities versus securities. It formally classifies most utility coins as digital commodities now under the CFTC rather than securities under the SEC. Now, not all digital assets will be considered digital commodities. Some will be considered securities. Now, one way to help navigate the future of this new industry is to see if the digital asset is viewed more as a currency, or to see if it has utility rather than something just representing a company like a stock or a bond. Now, some have argued that Canton coin, the CC coin, could be considered a security because it's not really viewed as a currency like XRP or XLM, nor does it handle settlements, and it seems centralized for banks. But the reality is that it does act as a utility coin on the Canton network and pays for fees as a currency. Now, with that being said, tokenized stocks or bonds on the Canton network are indeed securities. What does the Clarity Act bring to the table for these utility coins? Well, it brings safe harbors. It provides a pathway for projects to transition from centralized startups to decentralized protocols without being sued out of existence by agencies like the SEC. It also gives us the institutional green lights that we need. Just one example, banks and pension funds have trillions of dollars on the sidelines. They're not waiting for better technology. The technology is here. What they're waiting for is legal permission, regulatory clarity, and that's exactly what this bill gives us. The Clarity Act also helps the new messaging format, the ISO 20022 connection between that and the digital assets. We know that it is a new global language for financial messaging, replacing the old SWIFT messaging system. Now, although the technology is able to be used, A lot of these banks and financial institutions around the world, they still need regulatory clarity. The Clarity Act acts as a legal bridge for this technological standard. To better understand a digital commodity, think of it as like raw material, but in digital form, like gold or oil, for example. It exists on its own, and its value is actually determined by the open market, not a specific company or entity. For example, look at Ripple. How much good news have we seen over the past few years with Ripple, but the price of XRP has been stagnant or dead? That's a good indication that XRP's true value will be revealed through utility. Another way to think of it is XRP, HBAR, and others, for example. There is no XLM Incorporated or XLM Inc. or CEO of HBAR or XPR that has promised you profits. If the developers quit today from these networks would keep running. That's another indication that it is decentralized. Let's dive deeper into a digital security. A digital security is a wrapper. It's a digital token that represents an actual legal claim on a company's profits, debts, or assets. An example is a tokenized Apple stock or a tokenized bond. Now, why is it a security? Well, if you buy a token that represents one share of a company, an Apple stock, for example, your profit depends entirely on Apple's business performance. Apple has a legal obligation to the shareholder. So, if anything, this really gives us clear indication that XRP truly is a commodity, because even though we've been hearing all kinds of great news about Ripple's expansion around the world, XRP really has been underperforming. So what really is going to help drive up the price is true utility, and that would mean it's a true commodity. Now, digital securities are highly regulated by the SEC. Even if it's on a blockchain like XRP Ledger, for example, it must follow all traditional security laws, KYC, investor protection, and strict disclosure rules. The bullish narrative of the Clarity Act is a great decoupling that's coming. From non-utility to utility, we could very well see a large decoupling several weeks to months once the act is passed and fully into law. And within a couple years, we could see a completely restructured market, a completely different crypto market than what we see today. That's why I would not be betting on meme coins especially, or even Bitcoin for that matter at this point. This is why this is truly a special moment for coins that are mentioned on this channel. From speculation to utility, the last decade has brought us crypto assets that are more speculative or even holding value than actual utility working in this new financial system. If these coins are legally recognized as tools for the global financial system, their value starts to be driven by transaction volume, not just Facebook memes or hype. Now, the XRP Ledger, Canton, Stellar Network, and others, they thrive on institutional participation. The Clarity Act allows the institutions to hold these assets on their balance sheets. Now imagine the buy pressure when Fortune 500 companies start to diversify into HBAR or XDC for operational use. Garlinghouse's 90% confidence reflects a shift in Washington, with the White House setting a March 1st deadline for negotiations, and hopefully this will be passed within April. Now let's dive into some recent developments. Soil, a fintech platform developed by ORQO Group, has launched what it describes as the first compliant real-world asset-backed yield protocol on the XRP ledger. The protocol allows holders of Ripple's stablecoin to deposit their tokens on chain vaults to earn fixed sustainable returns. The yield is generated from traditional low volatility financial instruments, including private credit, tokenized treasuries, and market-neutral hedging strategies. The initial $1 million in asset pools was filled under 72 hours, indicating high demand for regulated yield products within the XRP ecosystem. Developed by ORQO Group, the platform operates with regulatory licenses in Poland and Malta. This launch strengthens the XRP ledger's position in real-world asset sector, which has recently seen it surpass Solana in total tokenized real-world asset value. Here we have some big news for Stellar XLM. As of February, The Stellar ecosystem is experiencing a major shift from a retail-focused payment network to an institutional-grade financial layer. The most recent and biggest news is CME Group's launch of XLM futures. The launch included both standard contracts of 250,000 XLM and micro XLM contracts of 12,500 XLM, making it accessible to both large hedge funds and smaller institutional desks. Now, why is this bullish for XLM? Well, it gives institutional validation and de-risking. Being listed on CME, the world's largest derivatives exchange, is a massive deal for XLM. It places XLM in an elite category alongside Bitcoin, Ethereum, and Solana for institutional allocators. This reduces the reputation risk of holding assets, as they now can be traded through a regulated US-based clearinghouse. Here's an XDC Network update. XDC has successfully implemented a major network upgrade known as a Canton hard fork. Now, why is this big? This aligns XDC's protocol with Ethereum's latest standards, specifically introducing EIP 1559. The bullish angle is this makes transaction fees far more predictable and burns a portion of the gas, creating a deflationary mechanism during high network activity. It also makes it significantly easier for Ethereum developers to port their enterprise apps to XDC without rewriting code. Big recent development for Canton fans: as Canton grows, so does its ecosystem of wallets, custodians, and applications. But to truly scale, standardization is needed. The CIP 0103 introduces a standardized dApp API that decouples wallet key management from network connectivity. It defines how applications connect to wallets, submit transactions, and respond to ledger events, creating a consistent developer and user experience across the network. For wallet and custody providers, this means implementing once and interoperating broadly. For user-facing apps, it means flexible onboarding across custody models. For backend developers, it means standardized interaction with the Canton ledger. Just as CIP 56 standardized asset definitions, CIP 0103 standardizes how applications interact with them. The result is a more composable, interoperable Canton ecosystem built for long-term scale. We have some huge Hedera news. FedEx Corp officially joined the Hedera Governing Council February 13th. So this move is viewed as a significant step towards digitizing the $10 trillion global logistics industry. So FedEx is the largest Fortune 50 giant to join the council, which already includes names like Google, IBM, Dell, and Deutsche Telekom. This news is considered massively bullish for Hedera fans because it moves Hedera beyond potential and into production at a global scale. In the crypto world, many partnerships are just marketing fluff. However, joining the Hedera Council is a big deal. HBAR is the fuel for the network, of course. Every transaction tracking a package, verifying customers' documents, or updating a logistics status requires HBAR to pay for the network fee. FedEx processes over 15 million shipments daily. Even if a fraction of those generate on-chain events like a digital fingerprint for every handoff, it creates a massive, consistent demand for HBAR. We have huge news for XPR fans. PayPal's PYUSD stablecoin has officially expanded to the XPR network, where it is represented as XPYUSD. This integration is a significant move for the XPR ecosystem, which is designed specifically for high-speed, zero-fee consumer payments. By wrapping the PYUSD onto the XPR network, users gain access to the stablecoin within a high-performance environment that focuses on identity and compliance.